Hey everybody, this is Jeff, Swing Trade Warrior with WarriorTrading.com, back with a weekly closed swing trade recap. Now, if you follow me at all, you probably noticed that the swing trading recap videos have been kind of sparse as of late, and there's an easy, reasonable explanation for that, and that's because of what the market's been doing. The market has been trading in an exceptionally volatile sideways range for quite a while now. And it makes continuation on trades day over day very difficult when the market's bouncing around 40 or 50 points one day and down 100 the next and up 50 the third day. It's just very difficult to get continuation on trades overnight. So what that means for us swing traders who are very happy to manage risk during these volatile times is that we end up trading less and we focus on only the highest probability trade setups. Now, out of all the activity that happened in the markets this past week, we ended up with 3 trades this week off the watch list that ended up being very profitable despite what market conditions were doing. I'm going to go over those trades right now, and we'll start with the first one on NAVB, NVIDIA Biopharmaceuticals. So NAVB hit off our scanners originally on September 13th here. And what I was looking at when I'm evaluating this chart setup here, now if you notice on the 13th, which is this big green bar right here, we got a nice 4% move up on high relative volume, on September 11th. It was Friday. We took this trade on Monday over the 230 mark. Is when we got long on this. Now, my stop originally was kind of the low of the day of the alert off the scanner. Was just under 220. So I only had a 10-cent stop on this trade. Now, if we zoom out on this chart here, we can see what I looked at when I was comparing the chart setup here on a daily time frame. Now, this is looking back through 2011 here. This is a good example of how looking at a daily chart on a large time frame does play a role in the overall price action of a stock, especially when we're swing trading. Now, if we look back here in November 2012 and December of 2013, we can see that this 230 level. The 230 level here is what was previous support back in 2011 and then previous resistance in 2013. And it took us a couple years before we began testing that area again. And now we can see, it's like I teach all my students, it's so clear when you zoom out a chart, you can see that previous support becomes resistance, right? And previous resistance will become support. So we're looking here at breaking through this resistance area, which was previous support. Then it became resistance, and now it's acting as resistance again, all right? Today we got to move up to 241 on this. And we finally broke through and closed above resistance after a little chop. Now, this was on a big down market day, but because we're breaking through resistance, we get a high relative volume push. My target on this trade is in the 270s, right? We had a 10-cent stop with a 40-cent profit target. So this is a 4-to-1 setup. Now, why did I choose 270? Because, again, using a daily time frame, what's the major area of resistance in the near term that this is likely to encounter? We see back here on August of 2013, we had 270. The 275 area was support. Back here in April of 2012, we have a support level, double bottom off of that 270 area. And then we had it way back in September of 2011, where it acted for almost a month or two. The 275 area acted as a support level in here, and then again it was support and resistance short term in January of 2012. So what does that tell us? Well, that tells us that once we break through the nearest resistance, our next reasonable area of major resistance where we can expect to see the stock take a breather, maybe it'll fail resistance, test a couple times before it moves up. Who knows how long that takes? We're just looking to capture on these short-term profit swings or short-term swings in price to get our profits. So looking at this chart here, again, 270 is my target. Why? Based on previous support and resistance levels. So we're long and strong on this trade. We're up about a little over 5% on it from our entry. Not really, even though I'd like to take profits every 5 to 10%, I think this does have a lot more upside to it. If I zoom in here to the short term, we finally broke and closed above resistance. I look to start scaling out some of this near or over 250. That $0.50 and those whole dollar areas will act as mental support and resistance. even if it doesn't necessarily line up with the chart pattern, just because the half and whole dollar areas are psychologically where a lot of short sellers and a lot of long buyers are going to put their stops. They're going to look. There's going to be a lot of churn at that price action because a lot of people, naturally gravitate towards those round whole numbers. So once we get over 250 or near 250, I'll scale out some and I'll hold the rest for the bigger move to 270. Next trade I want to look at is on LBIO. Lion Biotechnologies. Okay, this hit our scanner back here on September 14th. We got long on this trade on September 15th. Now, what was I looking at here when it hit our scanners? The first thing I see is a nice little uptrend here. We have a pop and some resistance up to 755. Pulls back down, kind of chops along the 20 moving average here, tests that 755 area again, and then boom, we get our alert on the 14th, and it's just under major resistance, right? This was resistance back in August, and it was support back in early August. So this 755 area has been in play for quite a while. We finally get a close above the 20 moving average. You can see this TAS market map here, which is the sideways, the horizontal bars, different colors. This yellow line indicates the area of contention, or the point of contention. It's where the most trading volume occurs at that price level. So at the 705 price is where the most buying and selling competing volume changes hands. And as you move up, the lines get shorter, and as you move down, the lines get shorter. Those are called squeeze zones because that's where there's going to be less competing volume, and we're going to see more accelerated price action and less churn. So once it broke over 205, it started moving up without really looking back. The second day in the trade, so we did get 5% on the first day in the trade, and my rule is usually always to pay myself every 5 to 10%. Okay, we got a pop up to 812 on the first day of the trade, and I scaled out near $8 for half my position. We got long at 750, over 755. So we took half our profits for about 40 cents here, up near the $8 mark. It did spike up fairly quickly before coming back down and closing just about 790. So we're in the driver's seat. We got 30 cents on this trade, or 3 or 4% cushion. The next day we open up above $8, and it ends up pushing a little bit higher. We happen to get a news release intraday on from Lion Biotechnology announcing a positive data release from one of their treatments in cancer, and that caused a halt and all kinds of intraday volatility. This thing spiked down hard and it spiked up hard, and we were able to get out the rest of our position near $8. It did spike up to 840 in about a blink of an eye, and unfortunately that was far too fast for me to throw an order out there. I should have had an order in place, but I did not. I didn't expect that to happen at all. I didn't know they were releasing data. Caught us off guard. But overall, the trade was still profitable, and there's maximum profit potential for about 20-25% if you were on your game. Now, why did this price action stop right here at 840 if the news was good? Well, because at 840 we can see this yellow line, the 200 moving average, is right there at about 848. So that's going to be a resistance area. And if we look back again using a previous support level, the low of this, the pivot of this whole time frame here, from June through July, the low was right here in the the 840 level also. So we know we came up and we tapped a previous support level, which is now going to act as resistance, and we're also tapping the 200 moving average here too. So we have a couple things working against us as far as continuation in that trade goes, but you know, when I look to take a trade, I want at least a 2-to-1 risk reward, if not more, and we certainly got it in this trade. We locked up a little over 5% total, scaling out, but the potential was there if you're, like I said, on your game and you're quick about it for 20% win or 25% winner. One of the other trades this week was on NK. Now, this was one that I missed, but it was on the watch list. I want to show you what I was looking at here. So this was on the watch list for, excuse me, on the watch list for September 17th. All right, it hit off our scanner on September 16th. Was looking for a high, a breakout of the previous range high here to take a position. Now, when this thing broke over 19, the long entry was triggered. We had a starter position set for about 1910 and then a scale spot over about 1950 or so. It closed today right at 1950, but it did pop up to almost $20. The range here on this trade is going to be to 21.33. So there's about a little over a point of room here on this trade with a, I think we had a, what was our stop? think we had about a 40-cent stop in place here. So this one's a little better than 2 to 1. It's about 2.5 to 1 with range to the first resistance. Okay, so it's starting to break out now. We're getting candle over candle trend confirmation. We're getting continuation of the uptrend. We're getting increasing relative volume, which shows us that the buyers are in control. This thing tapped the 20 EMA today, right here at about 20 bucks, just under 20 bucks. And so after it put in a big move, it slowed itself down and said, "Whoa, Nelly, we're going to slow down here. It's a Friday. It's a light volume day," even though we did put in a high relative volume move. And I think we break over that going forward into next week. Now, why did I choose that 2130 area as resistance? Again, previous support will become resistance. So somewhere, in the short lifespan, the short trading history of this stock, which is a recent IPO from back in July, we have a support level right here at 2133, where it's the low of this little pivot, and we're looking for that to be our first target. It also happens to be, gee, what do you know, a resistance level up here on September 3rd. We had a nice spike up, never held that level. It did fail it and come down, but once again, it tapped that 2133 area perfectly in line with previous support. Remember, guys, it's very simple. Previous support will become resistance, right? And previous resistance will act as support. So once the price action breaks through a support or resistance level, expect its behavior to flip. So once this is done acting as support and it breaks down, it's going to act as resistance on the way back up. Very simple. These charts are very easy to identify. These patterns are very easy to identify on the charts. My strategy is very simple that I teach. It's a combination of using the scanners to filter the stocks moving on high relative volume. Then we look at the charts for the best technical setups, and we find these levels. And if a chart setup looks good for breakout, we set our orders at the breakout spot, and we start scaling in and out of the trade every 3 to 5% if it's a little bit more expensive stock, or every 5 every 5 to 10% if it's a cheaper stock. And we do this over and over and over again. Now, I build a watch list every single day, and I put anywhere from 3 to 5 names on it, both long ideas and short ideas. And we have, a very high percentage of success when these trades trigger. By choosing the appropriate trigger spots, it keeps us out of losing trades. I might go 2 or 3 days with a total of 9 different names on the watch list, and not one of them breaks the trigger price, and therefore they fail, and the trade was never really profitable. They may go a few days later, but that's not the strategy, right? We're just waiting for them to continue the breakout on high relative volume. If they don't go right away, then we pass on the trade and we look for new setups the next day. By doing this, we're able to maintain a 65-70% profitability rate or win rate on the year. And by choosing stocks with good risk-reward setups, with nearby identifiable stops, and long, big targets to the next resistance area, we maintain at least a 2 to 1 risk-reward ratio in all our trades. And this is very important, right? So if you want to be profitable during choppy market conditions, with market volatility, there's a lot of fear out there with what's going on with the global climate, economic climate, with China, with our own interest rates. I expect now that the interest rates have been maintained and not increased, the can has been kicked down the road again, essentially, for a few months. I expect the market volatility to remain. I expect us to remain in a very large trading range with respect to the broader market. So it's going to be very difficult going forward to just buy and hold, because we're not really in a bull market rally. And, you can't really just short things, because we're not really in a true bear market at this point. We're not really trending. We're getting 2 or 3 days maybe of directional movement, and that's more than enough to profit from. But you have to find the right setups to do it, because we're seeing these markets pop up, give up all their gains by the end of the day, and we're seeing these markets gap down and then closing green or at high of day. So it's very difficult to trade around these conditions, but it can be done if you have a very specific strategy and you follow the rules. If you guys have any questions about any of these trades, you can get a hold of me, Jeff, at warriortrading.com. Always happy to talk to people about trading, talk about your ideas, and help you understand the strategy. I encourage you guys to check out warriortrading.com for more information, and my Skype contact information will also be listed below in this video. Other than that, I hope everybody has a great weekend, and get ready to get back at it on Monday.